We have discussed the various aspects of the cash flow statements and now arrived at the final aspect in the preparation of cash flow statements. While preparing the cash flow statement, the cash inflows and outflows of a business are classified into three types, that is, cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. Operating activities are the main revenue generating activities of an enterprise. The cash flows from operating activities have to be accurately calculated with due importance. There are two ways in which cash flows from operating activities can be classified, that is, the direct method and the indirect method. Let us first discuss these two methods and then we will discuss the preparation of cash flow statements. As per the AS3, an enterprise should report cash flows from operating activities either by using the direct method or the indirect method. Under the direct method, the actual cash flow information from the company's operations segment is used instead of accrual accounting values. Certain adjustments are made to the items which are recorded in the profit and loss statement on the accrual basis so as to convert them into cash basis while considering them under the direct method. For the purposes of the direct method, the requisite information about gross cash receipts and cash payments may be obtained from either the accounting records or by adjusting the revenue from operations, cost of revenue from operations, and other items in the profit and loss statement for items like changes in inventories, trade receivables and payables, and other non cash items and other items for which the cash flow gets classified into investing and financing activities. After these adjustments, the cash flow from operating activities arrived at under the direct method. Under the indirect method, the net profit or loss for the period is used as the base, and then adjustments are made for items that affect the income statement but not the cash position. So here the net profit or loss is first taken and then adjustments are made to eliminate non cash transactions and transactions which are of investing or financing categorization and not operating activities. Further, adjustments are also made to remove the effect of any deferrals or accruals of future or past operating cash receipts and the changes in the current assets and liabilities during the period. After these eliminations, the cash flow from operating activities arrived at under the indirect method. Here we can see an example pro forma of calculation of cash flow from operating activity under the direct method. The total operating cash receipts is considered by taking the total receipts and eliminating non cash and accrual items and those items that are separately classified other than operating activity. The total operating cash payments is deducted from the same. The operating cash payment is also calculated by taking the total payment and eliminating non cash and accrual items and those items that are separately classified other than operating activity. This gives us the cash generated from operations. Once the income tax paid is deducted from the same, we arrive at the cash flow before the extraordinary items. We have to eliminate the effect of extraordinary items by either deducting the extraordinary incomes or adding back the extraordinary expenses. This gives us the cash flow from operating activities under the direct method. Here we can see an example pro forma of calculation of cash flow from operating activity under the indirect method. As we have discussed, in the indirect method, the calculation starts by taking the net profit or loss as per the profit and loss statement. Next, adjustments should be made to eliminate the effect of the non cash items and items which are not to be classified as operating activity but have to be separately classified. In this regard, the non cash and non operating expenses have to be added back, and the non cash incomes and the non operating incomes have to be deducted. This gives us the operating profit before working capital changes. So now next we have to eliminate the effect of the changes in the current assets and liabilities during the period, as well as the effect of any deferrals or accruals of future or past operating cash receipts, since the profit and loss statement is prepared on accrual basis. Any increase in the current assets and decrease in current liabilities have to be deducted, whereas any decrease in current assets and any increase in current liabilities have to be added back. With this, we arrive at the cash generated from operations. Once the income tax paid is deducted from the same, we arrive at the cash flow before the extraordinary items. We have to eliminate the effect of the extraordinary items by either deducting the extraordinary incomes or adding back the extraordinary expenses. This gives us the cash flow from operating activities under the indirect method. Once the cash flows from operating activities is calculated, we have to then calculate the cash flows from investing and financing activities. There is no separate methodology to be followed in this. We have already discussed what items of cash receipts and payments get classified within the investing and financing activity. Such items of gross cash receipts, gross cash payments, and net cash flows from investing and financing activity must be disclosed separately as cash flows from investing activity and cash flows from financing activity, respectively. Once the cash inflows and cash outflows for each of the classifications have been ascertained and disclosed appropriately, then it has to be ascertained for each classification whether there is an increase in the cash and cash equivalents or a decrease in the cash and cash equivalents. Now, we have to first take the amount of cash and cash equivalents at the beginning of the reporting period and add the net cash inflows and deduct the net cash outflows ascertained for each of the three classifications. This gives us the amount of cash and cash equivalents at the end of the reporting period. Once the cash flow statement is prepared, it is of utmost importance to disclose under which method the operating cash flows are determined. Where a cash flow from operating activity is calculated as per the direct method, then the cash flow statement will be termed as direct method cash flow statement. And where the cash flow from operating activity is calculated as per the indirect method, then the cash flow statement will be termed as indirect method cash flow statement. With this, we come to the end of this chapter. We have discussed everything in relation to the cash flow statements. Thank you, everyone. Please provide us your feedback.